Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to the Money Factor. Today's topic is buying a home, especially concerning the mortgage. Our guest is Laurie Gioeni. She's with the Consumer Credit Counseling Service, and they're located just off Wolf Road on Computer Drive. I want to welcome you back, Laurie.
Thank you very much.
You were here once before.
Yes, I was.
And I was grateful then also. What does Consumer Counseling Service do?
Well, we are not-for-profit, and we focus our energy on debt counseling and budget counseling. In the housing portion, we do pre-purchase counseling as well. We focus a lot on pre-foreclosure counseling to assist our clients with avoiding foreclosure and maybe some steps to take to avoid that. Or if they're in the process of a foreclosure, maybe helping them out with the steps to take to get out of it.
Things have changed a bit in the last 5 years. I'm nervous to say exactly when it was, but with the financial crisis and the meltdown of financial institutions and all the foreclosures going on and houses sitting empty in Florida and Arizona, I guess the rules have changed a little bit.
Well, I mean, some states have been harder hit than others, but pretty much, nationwide, the housing has become a big problem.
Have you noticed much of a difference with your customers in terms of the new climate? Has that made much of a difference?
Well, it has. I mean, we're seeing a lot more housing counseling clients of late than we had in the past, just due to the economy and all the issues that have gone on.
Okay. So let's start with some basic questions that actually, in a way, is connected to the financial problem. A lot of people had adjustable rate mortgages.
Yes, they did.
And I guess that those went way back. They weren't a brand new offering from the banks. Are they dead? Is there still a reason to even think about one?
I think that there still is. I think when you're shopping for a mortgage, you keep your options open, and it's really all about the rate. And an adjustable rate doesn't have to be ugly. I mean, you want to pay attention to the cap on the adjustable rate. If you can get in at a really good rate and you know that the cap on it is relatively still reasonable and that you would still be able to support your house in the event that it fluctuated, you're really going to be okay with it, okay? But it's those people that got into the adjustable rates with these gaps in the cap, and then all of a sudden it shot up, and now they're in a house they can't afford. So just doing your research in advance, adjustable rate is not really an ugly word. It can work for people.
So from what you said, one should think about the worst case scenario based on...
Absolutely.
And then if that's really scary, or if that's something that's going to hurt you really, you probably shouldn't do it.
Probably not, because we don't know what's going to happen.
Okay.
So I mean, if there's an option during the life of your loan that it could peak out at such that you couldn't afford the payment, and then we also have to keep in mind that coupled with that is your taxes, your school and property taxes can also increase over the years. So you take that with a significant adjust, you could be in trouble.
Okay.
So you really need to be looking at worst case scenario and the highest that it could go, and the other factors involved in your life. What's going to happen in the next 5 to 10 year time span, that my life is going to change in ways that I may not be able to support it.
So the farther out also that you plan on staying in the house might make a difference?
I would definitely think so. Definitely, because life changes, and are we in a situation? Are you a home buyer that's maybe older in age and you're going to be retiring? Maybe you work 2 jobs now. That's not always going to be the case. We have a lot of young couples that come in. They're both working. They have decent 2-income families, and then they have a child. One decides to stay home. This is something that...
their salaries.
Exactly. So you have to look down the line at your goals and where you're at in your life to say, well, great, on paper, I can afford this property today, but the reality is in 5 years, if I want to have a child, 2 children, school, camps, sports,
Maybe not.
is life going to get that much harder or maybe even unmanageable?
And certainly unpleasant.
And unpleasant, yes, to say the least.
Another thing that people were doing, and this tied in with almost no down payment for loans at the worst of the in our history, is the interest-only loan. Is that something that people are still looking at? Is there still a reason to do that?
The product is still out there. I mean, I think if there wasn't a reason to use the product, it wouldn't be there. I just think that, again, you have to look at the long term, because if you're paying interest only and you're not paying down on principal, how is the fact that your house is increasing in value or not going to play a role in what you owe in the end? So when you sell that property, will it be worth enough to get to pay down the mortgage? So I think interest-only products are for people that maybe aren't really necessarily going to stay in the house for a super long time frame, so they're not looking to maybe pay it down as quickly.
Because it doesn't go down very fast in the
No,
beginning.
it doesn't. No, it doesn't.
Especially at 30-year.
Right. So, a lot can happen. So it's something that you have to really do your homework and see if that's a product that fits your needs.
Okay. And then there's also things like tax deductibility, if that means something. And I guess the higher the tax bracket and the more expensive the house, that could be more interesting to a person.
Well, I'm not really sure about that.
Okay.
I don't know how that piece fits into
So
the
see your
whole
financial
interest
advisor
only.
on that one.
Yeah, I'm not sure
Okay.
how that would fit. I mean, a lot of that would have to do with the tax bracket you were in, what you're able to write off, and so on and so forth.
You wouldn't
So
want to,
that's not
probably shouldn't say anything
something
about
I
that.
would comment on that
Okay,
piece.
sounds good. Something that maybe makes people nervous, although it's a really good thing, paying off your principal earlier. I think there are some programs where you actually sign up for that, and the bank agrees, but I've read that you can just send them a check.
You can. You're always able to send them additional monies and ask that it be applied to your principal. What you're referring to is what they refer to as the BiWeekly Program,
Okay.
too, where a lot of people will choose to pay their mortgage instead of once a month.
So you get 26
every 2
a year
weeks.
instead of...
So it automatically knocks that down
Get an extra
by, I
month.
think, a mortgage payment a year, which can take significant years off of your mortgage. So if you can afford to do the BiWeekly, I think it's a great product. It's not going to hurt you. The reason a lot of people would choose perhaps the BiWeekly, the more formal arrangement, as opposed to, well, yeah, I know I can send an
I have a
extra
little
payment,
extra money, I'll send it.
but they don't.
Okay.
It's always our intention. I think, well, I'll just do it myself. I'll send an extra payment every year, but there's always somewhere else that money goes.
Right.
So,
My
yes,
kids
it's
wanna
always
go
an
to Europe,
option.
et cetera.
Yeah. So that intention is great, but we never quite get there. So a lot of
Okay.
people fall back on the BiWeekly because it's more structured.
Fannie Mae and Freddie Mac, they have big problems. I know
Well-
that they played a role in the whole process. Are there still, do they still provide help to people in their?
Yes, I think that the help that has been given to people of late is a lot more than it ever used to be in the past. There's programs out there that, and lenders have their own programs that are willing to assist those that got in some financial trouble. Bottom line is, those programs are only applicable is if a person is in a property that they can actually afford. If they got into one of these products that slipped them under the radar, so they got approved, but they really had no business purchasing that house, none of those programs are going to help those people. But there are programs out there that can help the person that got into an isolated incident, or perhaps did get into somewhat of an ugly adjustable mortgage rate product. They are considering modifying those loans now and perhaps rewriting them with, if you will. They're not called refinance. That's a whole different process. But rewriting the loan.
So
in general.
could you give a couple examples of situations? Try to be a little more specific, where somebody maybe should ask about some help.
Well, I think that first of all, if you think that you're in an adjustable, you're rate adjusted, and it's significantly high, you're definitely a candidate to pursue a modification.
So ask.
ask. Always ask. You don't get what you don't ask for. Even if you're not behind and you foresee a potential problem, you should be doing your homework in advance. What does my lender offer in the event that I foresee a problem coming? You know, my company's got layoffs coming down the line. I'm fine right now, but if my income should get reduced, what are things that I can be doing to be proactive? A lot of the products or programs offered to assist clients, unfortunately, aren't applicable until they're 90 days delinquent. Or delinquent period. Sometimes if they're current, they'll say, well, call us when you get behind,
okay,
which some people find a little frustrating, but it's always worth
because
it.
they don't want to get behind.
Well, that's it, you know. So basically, we're hoping that the clients are going to come see Consumer Credit Counseling Services and do some budgeting so that we can review their current situation and help them not get behind, give them maybe other options.
So you're there to help?
Oh, absolutely. I mean, our housing counseling is one of the biggest things that we do, and it's helped many people.
Now, when you were saying that, I was imagining somebody in that situation being afraid to let the bank know that they might foresee a problem.
Sure they are. Sure they're afraid, but you don't have anything to lose, really. There's
well,
nothing
that's the important thing, yeah.
There's nothing that they're going to do by you telling them, I'm concerned, you know, I may have a problem. And there's a lot of...
Not going to immediately raise your rates.
Right. No. I mean, your rate is your rate on a mortgage. I mean, if you're in a fixed rate product, they can't just change your rate just because you're telling them that you might foresee a problem. And your adjustable rate is also regimented in terms of when it's able to adjust, depending on the product.
It's when you do mess up that now that's going to kick in.
Right. Well, it depends.
Okay.
I mean, that's really where you're going with your rate adjusting is more on the credit card end of the world.
Okay.
But in a mortgage product, your rate is your rate, and if it's fixed, it is what it is, and if it's an adjustable, it will adjust according to a time frame. So that's not going to be a surprise. The thing that people get tripped up on, as you mentioned, is people are afraid to contact their lenders, but they wait too long.
Even past the 90-day problem.
Well, this is the thing. I mean, they could even have a sale date on the property. So it really limits their options at this point. They're either going to be looking at a potential Chapter 13 bankruptcy if the goal is to save the property, or Chapter 7 if it's really too late.
That must be frustrating for you when they call you so late.
Well, it is because, you know, we're trying to get the word out there as much as we can. Be proactive. Come see us. Talk to your lender. But there are those people that are still scared and nervous and tend to bury their head in the sand. And you know, we can understand that, but we just hope that they get to us in time to do something.
I think some more questions which are more not related to the recent problems, just general. Mm-hmm. How long should a mortgage be? How can people think about that?
Well, basically, it's all going to depend on how much you can pay per month. Obviously, most young purchasers today need to go out to the max. I believe they go over 30-year terms now, but typically once upon a time that was the standard. You would probably want to do that if you were, say you were a first-time homeowner, you had, you know, young children, you know this isn't going to be your only property and you're going to be selling it. Being aggressive and having a shorter 15, 20-year term maybe not be your goal, but I mean, obviously the sooner your house is paid off, the better, but it really depends on the personal situation that you're in.
I've always thought of retirement as a good time to have a house paid off.
One would think so, yeah, and that would always be my goal. So if we have clients coming in saying they're considering refinancing, they're getting up there in years, and you know, one of our first questions is, well, what are your retirement goals? Are you going to have to stretch this loan back over 30 years?
Now
Does it make sense?
Right.
Probably not.
And you're still going to complain about the property taxes unless things change radically.
Right.
So at least take off that principal.
Exactly.
And then it's not going to be so bad.
Mm-hmm.
So it's going to depend, but longer for someone
Usually the younger folks take out the maximum to keep that payment within reason.
And you get to 50, maybe you better either have a lot of equity in your home or...
Well, you want to have a decision. Are we staying here? Is the goal to pay off the property? Are we going to sell it anyway? you have to have an idea
And what are we going to do?
of where you're going and what
and
you're
how much
doing.
equity are we going to have when
How
we
much
do
equity
that?
are we going to look to gain a lot of cash so that we can buy another property? Are we going to go into a retirement community
Right,
and rent?
okay.
So there's a lot of factors that are involved with how long you take your mortgage out for. Most people take it out for the max because that's the most affordable way to do it.
Right. Think of today. Fees. When somebody gets a mortgage, especially I guess a first-time home buyer, you're not expecting, or you don't really know what to think about a big stack of papers that you have to go through, and you think of, well, I'm going to be paying by the month, but then they start talking about closing fees and points, and now your eyes glaze over.
Those are costs that typically come into play at the closing of a mortgage. Your mortgage payment, if it's decided that you're going to escrow your taxes and your insurance, meaning include them in your mortgage payment every month.
So then the bank controls everything, or
Well, they're regulated, but what happens is prior to you closing, you have an idea of what your monthly mortgage payment is going to be, and the costs that are involved are calculated and placed on what they call a good faith estimate. So a customer can see exactly what the costs are involved to obtain that loan. Some of the costs that are going to be on there is you're going to pay for your appraisal, you're going to pay for your credit report, you're going to pay for an inspection, you're going to pay for your title insurance, most likely you're going to have an attorney fee. So these are all fees that are attached to your closing costs, but they are spelled out for you in the beginning. Can they change? Yes, that's why it's called an estimate.
Okay.
So we need to stay on top of those numbers too, to say, okay, at closing, well, you estimated this to be, say, 400 and now it's 650. Why such a gross difference? So people have to be really conscious of what those costs are.
I've heard of the expression garbage fees. Is that?
Garbage fees.
Maybe I'm wrong. I was thinking those are things that maybe aren't real typical, that sometimes you feel like they're just little things that get added on that maybe anything like that?
I'm sure like any loan product that you would obtain, you would have to be on the lookout for something called garbage fees. My guess, just from the term that you're using, is maybe there's fees that are unnecessary, which again just brings you back to your good faith estimate, line by line spelled out. Well, what does this mean and what is it for and why do I need it?
So can a normal person do this without an attorney, or should you really have an attorney?
Yes, a normal person can do it without an attorney, but I would never recommend that.
So even though many of our financial institutions, and I think especially the local ones, the major ones, you wouldn't expect them to be looking to nickel and dime someone, but
I would hope not.
But if you go out and you're looking for a great rate and you don't know the company and maybe you're going on the internet, maybe that would be a more dangerous situation?
Well, we don't, I mean, for me personally, that's not the way I would go. If I can't sit down with somebody in front of me to get my questions answered or have a go-to person, I would be reluctant. There's a lot of people out there that have a lot of confidence in the internet, and we don't want to say that that's a bad thing, but there's the New York State Banking Department, there's the Better Business Bureau, there's research. Do your homework. We don't want to say that all products that are online out there are bad. We're not here to say that. But there are some, but that's true in any business.
Right.
So if you don't do your homework, you could fall victim to one of those types of companies.
And so we hope that people could avoid that.
Yeah, do your homework.
You listed a flock of things that just went by when you were talking about the extra fees, and maybe we could just go over a couple of those. One was inspection, I think?
Yeah, well, typically you have to pay for an inspection, and especially if you're going for a loan product type for FHA, but most mortgage companies will require an inspection, and it really just protects yourself as well. Is the foundation sound? Is the roof okay? Do we have any major structural issues? A pest inspection? Do we have any carpentry ants? Those types of things. The bank really wants you to do that research so that they make sure that they're loaning money backing up a sound property.
Now, is
That's a fee.
Is that used also by the buyer, or do they generally use their own?
They have the option of choosing their own company.
Okay.
To whomever they want to choose to do the inspection is up to them.
Okay.
Same as their appraisal. There's a lot of companies out there that can appraise your property. The lender may make a suggestion. However, it's up to the buyer. They can choose their own.
Okay, and so let's
They
talk
don't
about
steer towards those people.
Okay, the appraisal. How does that affect the loan, and what that costs something?
Well, there's a typical appraisal fee. I mean, it's been a while for me, but once upon a time, the average appraisal fee was about $275 to $300. Again, it goes up if we're talking with a multi-unit property.
Okay.
They charge more. And basically, the house, first of all, has to at least minimally appraise for the amount of money you're borrowing. And if it's not worth what you're trying to borrow based on, the seller, obviously the bank isn't going to, that's going to probably be an automatic denial. So the appraisal is to say, okay, the house is worth at least what you're trying to borrow. And it also comes into play when they're determining the loan to value ratio.
Let's go into that a little bit more.
Well, the loan to value, each lender has guidelines of what their rates are depending on your loan to value. So if you're borrowing 80% loan to value, you may be eligible for this rate. If it's up to 90 to 95, you may be eligible for a different rate. So that's what they use, the appraisal, to determine the loan to value and where you fit on that scale.
So you're a little riskier if they have to worry about the house losing value of only 5% as opposed to 20.
Probably, yeah.
Yeah, and that makes good sense, especially in the past 10 years where we've had, in some states, pretty big declines in value. So you don't see too many people, I guess, how do people do it today? If you've got to come up with 20%, are people able to save?
Well, they would have to be able to save. A lot of people get money towards a down payment. They call it a gift. It can't be monies that had to be paid back to anybody. But there's all different products out there that require minimal down payments these days. So,
and I guess that's the old-fashioned way. It's just that we started getting out of that.
Yeah, we did. But there, a lot of places have, no money down, but you would have to have your closing costs and everything up front.
Okay.
So, there's always something that needs to come out of pocket. So obviously more is better.
Right.
But
there's a couple kinds of insurance that I had read about in preparing for this. One that I massacred a little bit, mortgage insurance, or you called it PMI.
The private mortgage insurance in a lot of cases is required by the lender for a borrower to have, and again, that's based on the loan to value. And I'm not sure of the exact numbers, so that would be better for a lender to answer, but once it drops down under a certain loan to value, you're not required to carry it anymore.
Right, so the longer you've had it.
Right.
Did the banks tell you don't have to have it anymore, or you could just keep paying it?
They're probably
forever?
not going to volunteer the information.
Okay.
So if you're not really up on that and you're not kind of watching it, I shouldn't really say that. I haven't ever known anybody that their lender contacted them and said, hey, by the way, you
don't
can get rid of
Okay.
your private mortgage insurance
Right.
anymore. So a lot of people kind of watch it on their own.
So maybe you would put that on your, I don't know where, we don't have a 5-year calendar, but.
No, you don't. But it's just something that, hopefully people are aware of.
Maybe put it on your 1-year calendar and move it to the next one.
Yeah, I think that a lot of people are aware enough about it that
Or if you
they
have
don't need it on the
mortgage
calendar.
coupons
It's
or
up
something.
here.
Okay.
If
just 5 years is a long time. I'm just thinking, how long would it take? And you don't know for sure because the market.
A lot of clients will call and just say, based on the market today, where am I at?
Okay.
So, the most they're going to say is, well, you're not eligible yet.
Okay.
It's not going to hurt to
In other
ask.
words, ask, yeah. So we'll get back to that again.
Sure.
We talked a little bit about different banks and different sources, but how can people shop around? Newspaper, is that useful, or should you just call?
I find the newspaper is very useful. They have a mortgage rate chart in there. Getting on the internet too helps. Visit the local bank that you do business with. Maybe you're eligible for a percentage of a discount because you bank with that bank. It's really all about the rate and the product and where you're going to get the best deal. Because the reality is, even if you apply to a bank and you close your mortgage with that bank, they could sell it the next day.
I think mine's been sold 3 times.
Probably. So is it really all about who you originate your mortgage with? Because it may not end there. It really is about who's going to give me the best deal for the least cost involved.
And that original contract is really the basis for everything, right?
Yes.
So you've really got to be careful when you go through that mortgage, and
Yeah.
you were saying you wouldn't do it without an attorney.
Personally, no, I would not. I would not. And you want to make sure that you're very aware of the cost, and especially at the closing table, when all is said and done and they give you what they call their HUD-1 settlement statement, which dictates exactly what you did pay and who got what, that has to be reviewed very carefully to make sure that the rate is correct, the term is correct. Am I escrowing my taxes? Am I not? Do they have that correct? I mean, they're human. People make mistakes, and it's not uncommon to get to a closing table and say, I was supposed to have a 20-year mortgage and this says 30.
Wow.
Well, then we got a problem. Not something that can't be corrected, but it's going to change a lot of things, so you have to really pay attention.
And you might want to adjourn?
You've got the 3-day right of rescission,
Okay.
to cancel anything.
Aha.
So you can either stay at closing while they're making those adjustments to see that they're corrected, or you can cancel. You can cancel, period, or you can cancel until it's changed, but you do have that 3-day
That probably means
window.
that not too much is going to happen behind the scenes for 3 days.
Correct. That's correct. I think that they withhold a lot of dispersing of funds, and I think they have to wait for certain things until the 3-day right of rescission is up.
So that kind of makes one feel a little better. You
Yeah,
could
it
even
gives you a
have a
little-
second lawyer or somebody to look at it,
Absolutely.
and they probably won't find anything, but at least you'll feel better.
Yeah, most likely anything that is grossly incorrect would be caught, we would hope, at the closing. Because if it's beyond the 3-day right of rescission, there's probably not going to be a lot of recourse that someone will have. So you want to really make sure.
You've
it's
really
accurate.
signed for a big part of your life there.
Yeah, you want to make sure it's right.
What kind of steps, kind of wrap up in a way, but take us through the process. I want to buy a house.
Okay. Well, first of all, I recommend 2 things. You're going to want to get pre-approved by a lender, okay? So if you go to a lender of your choice, they'll pre-approve you for X number of dollars on a mortgage based on your debt-to-income ratio.
Okay, and you don't know what you're going to buy yet.
Right, and your FICO score.
Okay.
They'll tell you based on this is the window of price range that I would be looking at. Then I'm going to go ahead and recommend that you come to Consumer Credit Counseling Services so that we can walk you through the steps in terms of budgeting, because the lender is going to let you borrow a certain dollar amount, but we're going to bring you back down to reality a little bit to say, okay, but let's talk about life. Let's talk about expenses. What's going to change in your world if you buy this house? Okay, are you going to be traveling further to work? Are you going to spend more money on gas?
Because they're talking about an average person. They don't exist, this average person. They're all individuals.
Right, everybody's an individual, and the lender's going to say you can buy this much house, and we're going to say, but if you still want to eat, maybe you want to look at more of this type of a house.
Right.
You're here, you're young. Again, we'll go back to you don't have any children. You're basing this home ownership on 2 incomes. What if you go down to 1 and you start a family? So what we do in our agency is help people plan better for not only today, but a little bit down the line, so that when they go for their mortgage, they're not getting themselves into a product that, okay, well, this looked great on paper 6 years ago, but now I'm really in trouble. Now I've done this, I've had 4 kids when I only planned on 2. Things happen. And my expenses are a lot higher having a big family. So we would be talking about all these things and say, okay, yeah, this is great. You can afford this much property, but let's think about all these other things, and maybe you want to look more in this range.
That sounds like really great advice. Just listening to you talk, I imagine the scale.
Yeah.
And I think we have this idea that we want to invest in our future, and a home is a great investment.
Sure.
And we're told that, and it is. But it's also something that sets the pace for what we need. And then if we don't have enough outside of that, now we're trying to hold on to our house. We can't pay our electrical bill. Our children need something for school, and life is one big piece of stress.
It is, and it's like that for a lot of people, but it doesn't have to be. I mean, obviously circumstances get in the way. You know, we can't be ridiculous and try to plan for everything in life that may happen. But within reason, generalities, you know, is it going to be a goal of yours for one of you to stay home with your children and avoid the whole daycare expense? You know, is that something that you're thinking about? You know, you work 2 jobs right now. You're approaching 50. Is this something that you foresee yourself doing in another 6 to 7 years? Well, no, I won't be able to do it then. But yet, they're using that in your qualifying factor.
Right.
So you want to maybe say, okay, well, let's look at this picture if I didn't have that job. Could I still support my life and my family?
It's a great place to end. I think you've covered many, many things that are really important and basic to mortgages. I know there are other questions that people probably have.
Oh, there's a lot of them.
So what should they do?
They should come and see Consumer Credit
Now, what do
Counseling
you
Services. We do not charge a fee for our counseling. I thought you did. It's a free service to come on and sit down with a counselor and let us help walk you through those steps, just to avoid any issues. And again, maybe we're just validating things that some people already knew, but if they leave with 1 or 2 pieces of information, then nobody's
And they don't
lost.
have to be worried at all about you knowing something because you're totally separate from everything else.
That's correct.
Laurie, I want to thank you a lot for coming back and
Thanks for
sharing
having me.
with us.
Yeah, we
Thank
look
you.
forward to coming back anytime.
Well, we'll find another topic.
Okay.
Great. And I want to thank you for watching. I hope you enjoyed the show. If you need any help regarding housing and housing financing, please give them a call. We'll put the number on the screen, and have a great week.
Welcome to Channel 17, the Town of Colonie Government Channel.